This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Guys, I'm going to do our monthly market update. This is for August 2025. I want to remind you that when we do these monthly market updates, the data we're using in August is actually for July. And I'm always talking about single-family homes because that's predominantly where I work. Not that I don't do condos and high-rises, but predominantly we work in single-family homes. So let's take a look at the data here. So this month, currently available 7,519. Last month, 7,460, only up a tiny bit. The inventory was growing by about 500 a month for the last 4 or 5 months. It only went up a tiny bit.
Less than 10% of that.
Yeah, it's just much smaller. The pending, 2133. Last month was 2286. Sold in the last 30 days, up a little bit, 1863. Last month was 1793. Still not a great number. This is a very low number for this time of year. Usually it's well over 2,000, maybe 2,400 normally. Months worth of inventory, we went down a little bit. So we went down to 4 flat months as opposed to 4.2 from last month. And average days of market went up 42. And our median price, guess what that did? Stayed exactly the same. 485, where it has been for like 6 months now. It hasn't really moved from that number at all. Now, last year at this time, we had 5,289 on the market. We sold 2280. I mean, we had 2284 in escrow.
Last year, this month, we had 2,300 less homes for sale.
Yep.
Only 23.
Yep.
Okay.
And we sold a little over 2,000 in that 30-day period. We only had 2.6 months worth of inventory, 30 days on the market, and our median price then, a year ago, was 480. So it hasn't changed much in a year. I want to point that out as well.
So we're saying officially to people, you could no longer say that house prices are screaming higher and they're
they've been flat for a while and they're staying flat. They're not going anywhere.
At least the median.
Yeah, the median.
Doing that, right?
The median, right.
Yeah.
Now, this is our stack chart. This shows you the volume. The interesting thing about this to me, guys, is this going to be the worst year ever here. I mean, it's really going back to 2007. It's even worse than 23. It's off of 23, which was our worst year in like 15 years. So
you take it all the way down to
2007, right?
Yeah,
Where the crash is starting.
Yep, that was the worst year.
Maybe 2000, but that doesn't count.
Yeah, you go back to that. It's so.
Well, what we end the year comparable to last year. We're going to end up being flat to last year. Probably
It could.
We're going to be down. We're going to be back at 23.
We're looking at like 23 level. Yeah,
you think so?
Yeah, we're behind 23 right now. We're behind both those years. So I think it looks.
All right, I got $20 on it.
All right. John's got $20 in, and it's documented. It's
we're
documented.
Closer to,
I don't know who has the other side of that, though.
Closer to last year versus 2023. I think we're closer to last year's number than we are to 2023.
By like 100
and single-family homes you're talking about, right?
It's 290 units difference.
Okay.
Right?
All right, here we go. We'll see.
I'm sorry. That's that individual month. I apologize.
Yeah.
Okay, yeah.
But I'm just saying, I'm willing to put $20 that it'll be better than 23.
I'll bet on anything. So what do you want to bet?
Because if interest rates decline into this year, then transactions are going to speed up and you're going to pull more units in.
Okay.
So
boom.
Are interest rates going to decline, John?
I just predicted the future.
Okay.
Yep.
Okay.
I'm just telling you.
Listen, for $20, I'll bet you that, and I hope it happens.
There you go.
And I hope you win.
All right. There you go.
Note this down. Someone out there in the world, note this down.
Carly's writing it down.
Carly's writing
it down.
$20. It's documented. Okay, here we go.
We have to beat 23.
The next.
Yes.
Okay.
Okay. The next.
That's generous.
This is the absorption rate. The months on inventory was 4.3. It's come down a little bit. For the it's been wavering around that 4-month period. It went slightly above it. Now it's coming back down a little bit this month. And then there's that median price, guys. Look at that. I mean, just 485, 485, 485. It slipped a little bit in a couple months, went right back to 485. But it's been that number for a while.
Sure.
And sticking with that number. And then this is the appreciation rate. We're currently at a 2.8% appreciation rate year over year right now, which is pretty sweet. That's kind of like where we would like to be.
Yeah, it's where I'd like to be for everybody involved.
Yep. Now, I thought I pulled this pie chart just to show how people are buying right now.
Right.
44% of the people, this is all properties. This is not just single-family homes, but all properties. 44% conventional, 19% FHA, and 10% VA. Only 24% cash. That's a smaller number than we've seen in a while.
But still elevated, I think, in historical terms.
Absolutely. Still a big piece because
I think 18% would be more typical in like a regular world. In this case, as cash is incentivized to come in the market still more than.
And I think that's because there's a lot of equity out there. It's easy to pull, and when you pull equity out of one home, you can just pay cash for the next one. Yep. There's just a lot of equity in property.
And we infused the economy with a ton of cash during the pandemic. And
you also add in your California markets being so much more expensive. As I sell there,
right.
I can practically pay cash here.
Indeed, exactly right. And I think that's what's happening. A lot of California buyers are paying cash in Nevada. Now, here's my stuff. Here's my line graphs, and here we've got 3 lines. You got number of homes sold, It's just hovering around that 2,000 number. We're slightly under it again.
No dramatic indication. Not the sky is falling,
Nope.
nor are things roaring to the moon.
Hasn't moved.
The biggest number we see in the last 12 months is April of this year, 2208. That's the biggest number we see. And that's not a great number, honestly, in terms of the number of homes sold in any given month. Now, the blue numbers, that's the median price. We were telling you, it's flat. It's not going anywhere. It's just, that's flat line. The yellow is the available, that's the inventory. And we saw that was shooting up for about 3-4 months, and now it's kind of leveled off a little bit in this last month. And then this next one is my new little
Yeah,
my
you
little
will only
gauge,
find this here.
It's my speedometer. Agents don't like to do this because I don't want just because I think the market's leaning towards buyers, I don't want that to discourage sellers. I don't think it should. It's not leaning in any dramatic way, but it's becoming a little bit more of a buyer's market, and that's based on what we call the absorption rate. Basically, how long it takes to get a home sold, and that's why I'm saying, because it's getting into that 4-month range, it's leaning a little bit towards buyers, and the number is 58, which is down a little bit from last month, where it's a little more stronger buyers last month. It's fallen off of that a little bit this month.
Right.
But that's what we're seeing right now. That's our monthly market update for August 2025. What's your thoughts, Rick? What are you thinking?
Oh, let's hear this.
They met the best go first, John. So
Oh, I see. I didn't realize.
I working backwards, I definitely think it's a buyer's market. And put it in perspective, you're seeing a lot of contracts now, not only with higher commission, but with concessions at a pretty decent rate.
Yep.
So you can see that from the actual ones that are written. However, there's still properties that are priced correctly and that are more sought after. It's more of a seller's market.
They're selling quick, yeah.
Yeah, they're selling quick, and the sellers are getting their price with maybe less concession. So it just depends on the actual transaction.
Yeah,
it just seems that more going towards buyers right now, but
this is a look from 10 miles up. I mean, every little community is a little bit different.
Right.
But I think that we are seeing it, and I think you've said this recently, and we're definitely seeing it. Sellers are giving more concessions now than they have in a long time. We're seeing them help with closing costs. We're seeing those things, and they're doing that to protect their price. They're doing that to keep that price. Right. That's what's keeping the price there, because if they weren't doing that, I think the price would have slipped a little bit.
That would be a good graph if we could pull that data.
To see what the concessions are.
See what concessions are. I mean, it's in there. I don't know if you can actually pull it out and do the calculation and then figure the median price.
That would be interesting to see.
The data that I've seen says that 44% of transactions have some amount of seller concession.
Okay.
So not quite half, but real close.
Right. Yeah. Okay, and how's that compared to what it was, say, 2 years ago?
It was
like almost nothing.
Nearly zero,
Not
right?
bad.
I mean, it's a very small percentage.
Right.
But this is giving some breathing room for buyers in this marketplace. That is just so welcome. We've come out of markets where the seller had 99% of the advantage.
Yeah.
Sellers could tell you, I want you to change your hair color if you want to buy my house. Now that sort of stuff has gone away.
And
right?
I want a 1-year rent back for free.
Yeah.
These type
all
of things,
that
right?
stuff was there. You're right.
Right. And so knowing that I'm on the buyer side at all times, basically, I am so grateful for this. Just giving a little bit of more oxygen for buyers to breathe.
And as you're listening to this, and you're a buyer who was maybe trying to get into the market 2-3 years ago, and there was so much resistance, you couldn't get in because the competition, because of investors or whatever, there was no concessions. Sellers are making concessions. You can buy a home. It can happen now. You can do it. Interest rates are not 3%. I'm sorry, they're not, and they probably won't be in our lifetime again, in all likelihood. But they're still not bad. Interest rates are not bad.
Our market has seen this interest rate for how long now? It's been 2 years, 3 years.
3 years now.
It's normalized.
Years,
This is the interest rate. This is what we're selling.
And this is historically, this is actually a little bit lower than the historical rate.
Right. We're off the peak by far.
Oh, yeah.
Truthfully, like you were high 7s at one point. If you go back to the highest point we hit, nearly 8, and so you're significantly off that. There are many clients getting very low 6s, even high 5s today. So it exists.